You're wondering how much it costs to refinance. How much is going to cost you out of pocket to do a refinance? You know that rates have lowered and you're going to save $200, $300, $400 a month, but you're like, I don't have any money. I don't know if I can do the refinance. In today's video, I'm going to answer this common question. Shout out to Nicole, a YouTube follower who actually asked me this question and said, can you please make a video on this? This one's for you and anybody else who is wondering how much it costs out of pocket to do refinance. Stay tuned. All right, Matt Gouget, Matt the Mortgage Guy, greatmortgagebroker.com. That's where you go to connect me and my team. Enough for a commercial. Let's talk about refinance. Very common question. I actually ran into a 7-year-old video I made that talked about this same subject because it is a common question. When people are looking to refinance, they don't know how it works. So in today's video, I'm not only going to tell you how it works, I'm going to show you with real numbers what it's going to look like for a future refinance. Now, you want to talk to somebody you like and trust. You want someone to be able to break down the numbers for you and show you, here's the costs that are associated with this. Even if it doesn't come out of your pocket, it gets baked into the loan, $3,500 in cost versus the $300 a month you're going to save, you're going to break even in less than a year. It's a refinance that makes sense, right? If they can't explain break even to you, then you probably got to find somebody else. Again, greatmortgagebroker.com. That's how to connect me and my team. We'd love to help you. We're licensed across the country. So I'm going to show you an example where you're going to have an estimated payoff on what you owe the old loan. And how a refinance works is that current loan where you owe $418,562 is going to be paid off with this new loan. The new loan is going to have a new balance. If you don't want to bring any money out of pocket, that new balance is going to be higher because it's going to roll in all the costs of the refinance into this new loan. You're going to have a new loan with a new company. Let's say you close it in April. Your first payment's going to be due on June 1st. You're going to skip May and, new company, new loan amount, new payment that's going to be due, generally speaking, about 45 to 60 days after you close that loan. Not the next month, but the month after. That's how it works. So let's show you a real example because I think this will drive it home for some people. I'm pulling up on my screen. Hopefully this is big enough to see. What I've got here is a couple different scenarios, and I pulled up 2 scenarios because I wanted to show you, you might be looking at 2 different estimates from 2 different lenders. They are sneaky nowadays. One might show you 5.999. Other one shows you 5.249. If you didn't know any better, you're like, I'll go with the lender that gives me the 5.249. That sounds sweet. What you have to look at is in box A, this lender with the lower rate is charging you $12,795, 3 points to get this rate. It might make more sense to take the 599 that cost you very little, $1,000 for this example. And sure, it's $133 more per month because here's the total monthly payment. But if you bear with me, I'll do the quick break even. The difference in cost is roughly $12,000. So $12,000 divided by the difference in payment, quick math, $133. You're going to have to stay in this loan for 90 months for it to break even. And honestly, these are numbers I just pulled out of a hat. It might be even worse than that when you look at the break-even analysis. But enough about that. Let's talk about how a loan is structured. Like I talked about in my example, you got a current loan. The lender's going to order a payoff. And let's say that payoff comes in $408,512. We can't use an exact number because then it's just not as real. So let's make the payoff $408,512. That sounds like a payoff. Now, you've got a new loan amount of $415, and I'll show you why. You've got $1,000, about a quarter point to get this rate. You've got a $795 processing fee. You've got an appraisal fee. You've got some title fees. There's going to be a recording fee. You're closing on the 15th, so you got about 15 days of prepaid interest. Then you also have taxes and insurance escrowed. So the new lender is going to collect 3 months of taxes, 3 months of homeowners insurance. The good news is for you on a refinance, if there's taxes and insurance escrowed on that one, whatever's left in that escrow account will be refunded to you within 30 days. But all of this stuff all rolled in, you can look at this and say, okay, my estimated cash close, I only owe $71 at the end of the transaction. Now, if you're somebody who cares about your loan balance going up, you can tell yourself, well, I've got a $3,000 payment I'm skipping, and maybe I'm getting $2,200 in a refund from the escrow account. I can take that $5,000, apply it towards the principal, and make my principal amount pretty close to what this payoff was from the old lender. You can choose to do that. You can choose against it, really personal preference, but that's how that works. So in this scenario, maybe you had a 6.999 and your payment was $3,300 a month. And now you've got a $2,957 payment at the 5.99. You're saving $300 a month. Back to the break-even analysis I spoke about, you can look at this and box A, lender fees, box B, appraisal, C, title fees. All these loan costs are real costs. These are quote unquote sunk costs. So you take these costs, you divide it by the $300 you're saving, and you tell yourself, I'm going to break even in about a year. The reason why I don't include the prepaid property taxes, homeowners insurance, and interest, you're going to have to pay that regardless. Those are costs that you have to pay no matter what. So really the break even is just the total true loan costs divided by your monthly savings, and then you see how long it's going to take to break even. I did hundreds of millions of refinance between 20 and 21. A lot of these analyses, and I can tell you that people get it wrong. So if you have any questions at all, please make sure to reach out to somebody you like and trust. If it's us, it's greatmortgagebroker.com. If it's somebody else, that's fine. But you want to look at it. You don't want to just go for the lowest rate you can find. Because in this example, you could go 5.249. It cost you an extra $12,000. If you didn't notice in my spreadsheet, I did it just how other lenders might do it, where they just bake in that extra $12,000 in cost. So now you've got a loan balance going from 408 to 426, and you got $18,000 worth of cost being rolled in, but you got a shiny new interest rate. They make you feel good about that. So it's going to be something in 2024 and 2025 that a lot of people take advantage of. Refinance is a beautiful thing. The 30-year fixed rate mortgage is a beautiful instrument where they're never going to ask you to pay more interest, but you can go in and renegotiate to get a lower interest rate by refinancing and save yourself hundreds and thousands of dollars. So hopefully this video was helpful. Again, you don't have to come out of pocket to refinance, but you do want to look at what dollars and cents are being charged in different areas. If you want to connect me and my team, greatmortgagebroker.com. We look forward to talking to you. Talk to you soon. Bye-bye.